China didn't just launch a digital currency. It activated something far more consequential, a $1.2 trillion financial infrastructure built not for fanfare, but for quiet systemic transformation. No grand announcements, no global headlines, just a steady rhythm of code executing a long-term strategy more than a decade in the making. While the world remained fixated on a usual economic theater, interest rates, inflation targets, market sentiment, Beijing was playing a different game altogether. Not by confronting the dollar-dominated system head-on, but by gradually outgrowing it, routing around it, and now slowly supplanting it. As the global economy continues to rely on legacy systems like SWIFT and dollar settlement chains, China has been methodically detaching, not with proclamations, but through infrastructure, bilateral agreements, custom-built frameworks, and programmable currency. The ECNY, China's digital yuan, isn't a test run. It's a completed core layer. According to the People's Bank of China, by early 2025, the system had already handled more than 1.88 trillion yuan, around $250 billion, in pilot transactions spanning 200 countries and territories. But this isn't a story about scale. It's a story about sovereignty, redefined. In this digital era, sovereignty isn't marked by borders or emblems. It's about who controls the platforms that move capital. And China is embedding that control deep within global supply chains, regional financial ecosystems, and the foundational infrastructure of other nations' financial systems. The ECNY is more than digital cash. It's a programmable protocol, a sovereign alternative to a system historically shaped by Western control points. This isn't just fintech with Chinese characteristics. As economist Martin Shores has noted, it's the first state-backed contender to SWIFT and EBN with the necessary reach, scale, and technical depth to truly compete. In 1944, the U.S. dollar ascended at Bretton Woods. In 2025, without a single shot fired, China may be redrawing that legacy. No fleets, no sanctions, just bilateral swap lines, smart contracts, and digital infrastructure other economies are already leaning on. If the ECNY is China's monetary Manhattan Project, we've only glimpsed the surface. Beneath it is a vast digital mesh, a web already threaded through the capillaries of global finance. Since 2015, China has signed over 41 currency swap deals worth more than $580 billion. These aren't just trade enablers. They're workarounds to the dollar, allowing renminbi to circulate directly, bypassing sanctions, compliance bottlenecks, and Western oversight altogether. By the end of 2024, nearly 40% of China's international trade had already moved off the SWIFT grid, rerouted through its own cross-border interbank payment system, CIPS, now linked to over 400 banks in more than 110 countries. Picture crude oil from Saudi Arabia paid in yuan, instantly, with no dollars, no intermediaries, and no delay. That's not theoretical. It's already in motion. Kenya settled oil imports from the UAE using yuan. Argentina, squeezed for dollars, repaid part of its IMF debt in ECNY. As the yuan steadily gains traction, the world's reliance on the dollar is beginning to show cracks. SWIFT may still process 40 million messages daily, but its dominance is eroding, especially across the global south, where economic pragmatism increasingly outweighs geopolitical allegiance. The numbers say it all. In just 2 years, the yuan share of global payments has climbed from under 2% to 6%. This isn't de-dollarization driven by ideology. It's self-preservation. Because when the dollar becomes a weapon and SWIFT access becomes a sanction lever, nations begin searching for alternatives. They're not rejecting the dollar. They're insulating themselves from its vulnerabilities. The ECNY provides that insulation, a sovereign end-to-end platform with no Western intermediaries, no corresponding banking chains, and no exposure to unilateral restrictions. Just two parties transacting under Beijing's digital supervision. But this isn't merely about currency. It's about control, about code, about influence. So what exactly are we witnessing? A move toward decentralization, or the emergence of a new digital hegemon? The answer is unfolding live. In Indonesia, small merchants are accepting ECNY via QR codes, eliminating the need for dollar conversions. In Malaysia, the central bank has directly integrated its real-time payment system with China's, a move once unimaginable. Across ASEAN, over a third of all China-linked trade now bypasses the dollar entirely. What's taking shape isn't just a new financial toolkit. It's a new operating system for the global economy. One where China doesn't merely plug in. It architects the framework. It owns the infrastructure, writes the code, and decides who gains access. As Alicia Garcia Herrero of Natixis observed, China isn't merely exporting products anymore. It's exporting the very scaffolding of financial globalization, and the world is quietly logging on. This is no longer just about money. It's about power, encoded, exported, and embedded. China is silently laying track beneath the global economic engine, inscribing its rules into the very systems that shuttle trillions. And once you're running on Chinese rails, independence becomes conditional. Because if China owns the rails today, what's to stop it from controlling the routes tomorrow? Every single day, over $83 billion flows through the Shanghai-based cross-border payment system. This isn't a scenario of the future. It's active. It's programmable. It's not a multilateral patchwork anymore. It's a unified, sovereign alternative. It's a rapidly expanding system, one that can operate unilaterally at Beijing's discretion. What it gains in speed, it risks in sovereignty. Because one question now eclipses all others: who holds the kill switch? Late 2023 rattled the established order. A cross-border trial between Hong Kong and the UAE saw trade invoices settled in mere seconds. Transaction costs plummeted, down 98%. This wasn't theoretical. These were live results. Unlike SWIFT, which merely transmits messages, China's digital yuan transfers actual value in real time. No intermediaries. No FX lags. No waiting. As Josh Lipsky put it plainly, China's not just upgrading the rails. It's bulldozing the stations, tearing out the ticket counters, and seizing the entire route. After Russia was ejected from SWIFT in 2022, China's system exploded in relevance. Volume on the cross-border interbank payment system surged over 90%. Not a one-off, a signal. Beijing moved quickly, expanding digital yuan swap lines to Brazil, Pakistan, Saudi Arabia, nations boxing by dollar dependency. Even U.S.-aligned states like Egypt, Indonesia, and the UAE began clearing trade in yuan. The trend is unmistakable. The more Washington turns the dollar into a weapon, the more the world searches for the exit. And Beijing is building the exits fast. Ishwar Prasad didn't hedge his words. The very tools America uses to preserve dominance are fueling its erosion. Sanctions no longer stifle. They inspire innovation. The next global financial revolution isn't being written in New York. It's already operational in Shanghai, scaling in Shenzhen, spreading fast. The Belt and Road Initiative laid the groundwork. $1.1 trillion poured into roads, ports, and grids across 148 countries. But today, concrete isn't the foundation. Code is. Currency is. At Kenya's Mombasa port, Pakistan's Gwadar terminal, Laos's high-speed rail, payments now settle in ECNY, China's digital yuan. Wallets issued and surveilled by the People's Bank of China. According to Bloomberg, 13 Belt and Road nations are actively piloting ECNY for settlement. Some are moving further, exploring smart contract-based debt repayment. Programmable, traceable, reversible. This is no longer just finance. This is automated compliance, enforced obedience. As Garcia Herrero warns, China doesn't just lend, it dictates. Where funds go, how they're used, when they're returned. So what is this really? Infrastructure or digital colonization? In 2024, at the BRICS summit in Johannesburg, the blueprint came into view. Member states agreed to construct a cross-border payment system using central bank digital currencies, with China's ECNY at the core. For central banks are already in live pilots. SWIFT data confirms it. Across much of the global south, yuan usage now exceeds the euro. This isn't collapse. It's calibrated fragmentation. By 2026, BRICS aims to launch a unified settlement network. The dollar's reign isn't over, but it's no longer sacred. The gates have opened. The map is shifting. And in this disjointed new world, power doesn't reside with who prints the money, but who moves it. Then came January 2025, Trump's second term, a renewed trade war, 60% tariffs on all Chinese imports. Beijing didn't retaliate. No tit for tat, no fire, just acceleration. State-owned banks began pushing ECNY deeper into export financing. By Q1 2025, the use of digital yuan in trade settlements had jumped 19.3% year over year. ECNY trade loans were cheaper than their dollar counterparts. Letters of credit in yuan came at up to 40 basis points less. The signal from Beijing was unmistakable. This isn't about winning a trade fight. It's about constructing a firewall that Washington can't breach. This isn't a clash over goods. It's a race to write the global financial operating system. The dollar isn't vanishing, but its monopoly is. Its role as global gatekeeper is being outpaced, not by politics, but by protocols. While America debates tariffs, rewrites bills, and lobbies Congress, China is laying down digital rails beneath the old physical roads, embedding currency into contracts, writing payment logic into ports, pipelines, and power grids, all connected, all programmable, all owned. What's coming isn't just faster settlement, it's total visibility, real-time control, precision enforcement, the power to shut off liquidity instantly when a partner steps out of line, and when the next crisis hits, and it will, when liquidity is needed immediately, not in 3 months, and America's response is late, slow, politicized, will the world still wait for the dollar, or will accept China's terms? Because make no mistake, China isn't preparing to endure the next financial war. It's positioning to win it before the first shot is even fired.